Hello from the Dukascopy TV studio in Geneva. For our technical analysis, I am once again joined by Jean-Francois Owczarczak from the Management Joint Trust. Jean-Francois, welcome to the studio.
Hi, Daniel.
We are still in a downtrend for the euro, but today we have seen a reaction up from the euro. So how does the system FinGraphs interpret this reaction? Can we have a look?
Well, we'll have a look at it. First of all, we're back on our FinGraphs mosaic. So we look at an hourly mosaic today. So a perspective over the next few weeks. We have euro-dollar, cable, euro-Swiss, gold, dollar-Swiss, dollar-yen, Brent, and the S&P futures. So going into euro-dollar, we'll look at that reaction on a trader's view afterwards, but we'll start with an investor's view. So the perspective over the next few quarters with a weekly chart, the perspective over the next few months with a daily chart, and the perspective over the next few weeks with an hourly chart. And at the moment, all three trends are still on a bear, which translates into a potential continuous downtrend. Now, if we focus on the weekly, we believe the downtrend for the euro is not quite finished yet. There's probably another 1 or 2 quarters to go. Our risk index is quite oversold. We do see our two envelopes touching each other, so that's a sign of market stress. But our targets are not fulfilled yet. We could actually move down below 106 over the next few quarters. And in terms of timing, there's still a bit of time to reach those targets. So still negative over the long term. Now on the daily, also still a negative with a bear figure in here. We have had an intermediate bottom here with our risk index going into the oversold zone and reacting up. We did have stress on the envelopes, but the reaction up has been very, very mild, and we are again now in a resumed downtrend. That said, we believe there's probably more work to do over the next month or so, as we have already reached our impulsive 2 targets down. So these usually are used for very extended targets, and as we have reached those targets over the next few months, the downward potential is fairly limited. Now the hourly, last week we were saying that we would move back below 112, actually happened. We are coming again in a point of stress where the two envelopes are touching each other and the risk index is oversold. Now the potential for this move is probably not quite finished yet. It could lead us to 112 where we have been, down to 110.80. So we believe we're still on a downtrend over the next week or so. It doesn't seem quite finished yet. That said, if we focus on the trader's view is the perspective over the next week, over the next day or so, and over the next hours on a full minutes chart. It is still a downtrend on the 60-minute chart, but it has been reacting up on both the 15-minute and the full minute chart. Now if we look at the 60 minutes, we're probably in a zone where we could have an intermediate bottom. We could see that our risk index is any oversold and has seen some reactions. Our envelopes are touching each other, so a point of market stress. And our targets have been fulfilled as we came pretty much in the middle of them and in the middle of the timing range. So this reaction up that we've been seeing this morning is only a correction for now. You can see the gray projection here. And to create anything more meaningful, it would really need to move above 112.64 to accelerate. So for now, it's only an intraday correction up. And that 112.64 is all the levels to watch out for more. The 4 minutes is moving up, has pretty much reached its potential. It's not quite overbought yet, so we think there's probably a further move up over the course of the day.
So just a correction for now. If we look to the gold market.
Well, I just want to have a quick look at cable. Cable has been very strong over the last few weeks. It is, however, still in a downtrend on a weekly chart over the next few quarters. Still in a downtrend on the daily charts, although it is quite extended. And on an hourly chart, it has started to correct. Now, it's interesting to see if it will have the weakness to move into these corrective targets and possibly move below them. But at the moment, we would expect it to be weak into this corrective zone, and the 152.53 is going to be an important test over the next few weeks.
Okay. So if we have a look at the gold market.
So the gold market is a bit stuck between a rock and a hard place. If you look at, this is an investor's view, if you look at the weekly chart, it is still heading lower, as it has been over the last 2 years. Our targets still point to levels between pretty much 1,000 in 1,200, which brings an average around 1,100. We think these are probably decent targets that we could expect over the next few quarters. We have seen signs of intermediate bottoms here, but at the moment we have failed to see a widespread reaction up. We did try to initiate one on the daily. It did move up. We're seeing more market stress at the moment on this retest that we have seen over the last few weeks. Now we would really need this to turn back up and ignite impulsive targets again. If you see here, a bull trend but no targets. This is a neutral situation, and a neutral situation in the long-term downtrend is still a negative. So on the hourly, to create that, we really need to go impulsive again. That means move above our gray projections here and above 1241 to initiate a stronger move up, which may ignite a new move up on the daily and cast out over the weekly.
So if we look at the equities, last week we said really there is, the equities are really on the rise. Is this development really continuing?
Well, we're on an investor's view here for the S&P future. Over the longer term, over the next few quarters, we are now in impulsive 2 projections, so quite aggressive projections. The risk index is overbought, but it could stay overbought a while before it turns. We do have initial envelope stress, but at the moment it still seems like this trend is likely to continue. And the targets in this impulsive 2 target zone are around 2,200 to 2,400. So there's a bit more to go over the next few quarters, and we remain positive over the longer term on equities. Now the daily also has a positive projection, and over the next month or so we could expect prices to stay above 2,100 where we are at the moment and possibly move almost to 2,200. That said, the risk index is turning down a bit. We could see a stress on the envelope, so we might see a short-term correction here, but more generally, we still think that over the next few months we're positive in equities. And on the hourly, last week we were still positive. We actually went up and reached the top, and we've entered a consolidation period. Yet the trend is still heading higher, so we don't expect it to be too damaging for now, and would think that equity markets should resume their uptrend during the course of the week.
Jean-Francois Owczarczak from the Management Joint Trust with your product fingraphs.com. Thanks so much for sharing your expertise with us today.
Thank you, Daniel.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a great day and see you next time.